Welcome to The Weekend with me, Steve Savant, host of the daily internet talk show, The Business Insurance Zone, and national insurance columnist. Right now, we're living in the greatest borrowing consumer environment ever with interest rates being so low. Even if you're borrowing money for a car from a bank, it's 3.43 for 4 years. Most car dealerships are actually doing it at zero cost. Think about it. Home equity loans are at 4.75 on an average, and right now refinance and new mortgages are at 3.53 for 30-year lockdown. What a deal for consumers. But these rates, even though they sound so low, when you're using these kind of rates, when you're taking income out using life insurance policy for retirement, those loans are too costly and they can really chew into the total rate of return and, of course, the income that you're really going to receive during retirement. Whenever I'm looking at indexed universal life, and I really like it as a retirement alternative and a supplemental income idea, I always look at the policy provisions. They're all over the board from carrier to carrier. I need to always know, is it a fixed interest rate loan or is it a variable loan? If it is a fixed interest rate loan, is it zero net cost loans? Is it wash loans? Is it spread loans? Is it direct recognition loans? Is it participating loans? I know it sounds like a lot, but all this really matters during your retirement, and you want to make sure you're getting the right deal that's best for you as the consumer. Think about it. You want your income to come as best as you can and cost you the least. It is your money after all. Now think about this also. They also use variable loans, which can change depending upon what index it's tied to. And I have to make sure that my variable loans have caps or ceilings so that it can't go off into the double digit. I want to be able to always look at policy loans, whether fixed or variable, and look at this one statement. Is it current company practice or is it contractually guaranteed? All of these things really matter when we're talking about taking your money out of your policy. I love indexed universal life. It's a great tactic, fantastic for retirement as an alternative. But remember, it's only as good as the contract behind it. And policy loans drive these income scenarios. So it's important to know, is it current company practice or is it just contractually guaranteed? Is it fixed or is it variable? And if it is fixed, is it zero, wash loans, spread loans, direct recognition loans, or participating loans? And one key point, and it's very important, the maturity dates of these contracts. What happens if you were to outlive the maturity date of the contract? All these policy loans would be a taxable event at ordinary income tax rates. We don't want that to happen. And remember, since most clients aren't paying the interest rate, all the cash value inside the contract that was used to cannibalize itself for interest rate payments would also become taxable in that year. So it's important to make sure that that maturity date goes all the way out. In fact, we're looking at 120 on most of our contracts. Most of our income only goes to age 100, but it's important to make sure that that contract goes all the way out to 120 just to preserve the tax-free status. And one final point. Some contracts are allowing now payments beyond age 100. If they've already used their basis, if they've already used the gain in the contract, keep in mind that anything after that time, after age 100, and they're still making payments, that income actually is taxable. I'm talking about indexed universal life for retirement. It's a great strategy and a great idea. But remember, policy loans drive this entire platform of retirement income, and you have to know the provisions in the contract. Are you ready to look at your retirement? Is indexed universal life a consideration? Is your advisor showing you income streams using policy loans inside the contract? Don't sign anything until you see the top policy loan provisions side by side so you can dare to compare. We have the test that buys the best, then we just toss the rest. I'm Steve Savant. Welcome to The Weekend.